So welcome. Friday Coffee Meetup is the largest active innovation, entrepreneurial, and tech meetup in Los Angeles, California. We have recently become a part, again, of Innovate Pasadena, and we're so pleased to be back under their umbrella. They help bring innovation to the Southern California community, and we're so excited to be a part. We would love to invite you guys to check out the innovatepasadena.org site and sign up for other events, because there are many beyond just Friday Coffee Meetup. Follow them on social media. They're also giving away a number of gift cards for Jones Coffee Roasters, which some of you know that Jones has been a speaker for us in the past. So they're giving away 10 gift cards. So please check out the link in the Zoom Q&A panel, or in the chat panel. I will be posting it there in a little bit, but we would love for you to join us over at Innovate Pasadena. We have an exciting speaker this morning. For those of you that are on the Zoom, you will be able to ask questions through the Q&A panel at the bottom center of the screen. For those of you on LinkedIn Live, you can always join us on the Zoom. I have the link in there for you. The chat channel is unmoderated, but you can feel free to introduce yourself in the chat channel if you'd like. And just, it's unmoderated, so use caution what you put, please. We are so excited to have Delilah Panio here with us this morning. She is the VP of Capital Formation at TMX Group, and she's going to be talking to us about public venture capital and if that might be right for your company. Public venture capital can be used as an alternative to private venture capital for companies that are raising Series B plus capital. And she advises US companies on how to list and raise capital on Canada's premier equity markets. She is a frequent speaker and pitch competition judge and coach. She was named in 2019's Top 100 People in Finance magazine. Delilah, we are so pleased to have you here with us this morning. Feel free to come online. We want to hear from you.
Hi, Christy. Thank you. Good morning. Really excited to be here. And yeah, just really thrilled to get some questions and get some conversation going around this, this financing topic.
Wonderful. Well, go ahead. I know you're going to start us out with a video this morning. Go ahead and share that. I'll make sure it gets set up, and then I will turn off my camera and let the focus be on you.
Okay, here we go. Okay, wonderful. So thank you for inviting me on today. I'm going to just pop on my slides here. Give me 1 second. So obviously, you know, last year was a super exciting year for the capital markets, both in Canada and in the US. And so what I'm going to do is whip through some data and some slides for you today, just to give you an idea of what's been going on in the markets in North America. And so hopefully we'll go through some of this, and we'll talk about the opportunity for US companies, what the real value proposition is. And then I'm happy to obviously take any questions. So let's start with, excuse me, with what has been going on in the capital markets in the US. So obviously, as you can see, it was, it was a record year for US IPOs by filings. I mean, check this out. This is the number of IPOs that were filed last year. We haven't seen this kind of activities for many, many, many years. And then if you look at the money raised, this was actually the most money raised, even beyond the boom, 10, 15 years ago. So significant dollars raised in the public markets in the US. And if you think about who's leading that IPO boom last year, it was really in the healthcare, health tech, and the technology sector. So no surprise there, as we saw incredible innovations in healthcare and health tech and technology coming to the market. So can't talk about last year without talking about SPACs, those special purpose acquisition corporations. If you're not familiar with what that is, it's basically organizations and founders that come together to create a shell company, raise significant capital, and then look for a private company to bring public through that shell. And so we thought 2020 was a big year for SPACs because it was, it kind of came out of obscurity. But look at 2021. So the number of SPACs that were created, the number of dollars that were raised, the number of companies that actually went public via a SPAC. So again, think about, the number of companies that just go public in general, just through traditional IPOs in the US on New York Stock Exchange or NASDAQ. And then last year, the number that, as well as going public through IPOs, but the number that actually went through SPACs was significant. But here's a number, if you're a private company sitting there looking to go public, here's the number that matters. So this was, at the end of the year, and these numbers have already continued to increase, but there were over 570 companies SPACs looking for a deal. So if you're a private company, I would not be surprised if you have been wooed at some point by a SPAC. And so because there's a lot of money, a lot of capital sitting there, looking to be deployed. And so I would just say, if you are in conversations with SPACs, just be very cautious around motivations of the SPAC founders, the sponsors, and also just making sure that the capital is actually there, because oftentimes you'll still have to do a capital raise. But regardless, SPAC were a very, very big deal last year, and so a big part of the capital market. So that was in the US. What happened in Canada? So same thing, record year. So just as a quick knowledge point, that we run a 2-tier market system, Toronto Stock Exchange for senior companies, large companies that are revenue generating, more stable. But we uniquely have something called the TSX Venture Exchange, which is we list very early stage, even pre-revenue companies, and what we call this concept of public venture capital that Christy was mentioning at the beginning. And so our market last year, we're a top 10 stock exchange in the world. And last year, we're typically about a $3 trillion market cap marketplace. And last year, we hit $4 trillion for the first time. So just talking about just the valuations, the enterprise value of all these companies that went up. And so last year we had significant capital raised. And again, the big story for us was in the tech sector, which people know, us a lot more traditionally for mining, oil and gas, which we're super, obviously grateful and proud of those franchises. But the last 5 to 10 years, the amount of money raised in the technology sector for Canada has been just been records. And so same thing with new listings. The big story here again, IPOs on TSX. So we've had more IPOs on our market than we've ever had in the past, and a lot of that again driven by the technology sector. And so what's cool about our market, and this will be more relevant, especially for US companies looking at using our marketplace to grow their companies, is that we have, because of the 2-tier system, we graduate companies from the venture exchange, the junior market, to the senior market. And last year we had a record number of graduates. And so what that means is that there is liquidity and capital for those early stage companies, as Chris was saying, raising that Series B plus capital, and then to get to the Toronto Stock Exchange as a graduate. So again, just a really big year. For the US companies on our market, you saw the video, record number of financings, record number of listings, the size of companies, the valuations were all up. And so again, this is the relevant point, for those listening today about, why the US. So or why the Canada for US companies. So let's talk about that. So here you are, you're an early stage company, you're a startup, you're a high growth company in Southern California, and you're looking for growth capital, or you're looking to exit. And so, there's a lot of these capital sources that are intuitive to you, or well-known paths. But this concept of going public and using public venture capital might be fairly new to you. And so that's really where there's an opportunity. If you were looking for an alternative to private venture capital, you have, a sophisticated management team, and you're looking to grow, and you ultimately want to get to New York or NASDAQ, and we can be a stepping stone for that path. And I'll get more into that. So again, putting into context, right? So again, on our market, even the Toronto Stock Exchange, which is a large cap market relative to the US, these are small public companies. If you look, even TSX, the average market cap is 3 billion Canadian. So that's about, 2.5 American. And then, but on the venture exchange, I mean, look at this, the average financing is about $10 million. So this is true venture capital. The average market cap is around 76 million. So these are very small companies that are looking to take advantage of going public. And so if you were this puts it into context. If you're a billion-dollar technology company in the US listed, you're like number 449. If you're in Canada, you're number 30. So that means, bigger fish, smaller pond. What does that mean? Access to institutional investors, greater analyst coverage, greater exposure. So this is why you would think about coming to our market on your way to get to the senior boards in the US. And so we have several ways of going public, and I won't go into these details. We also do SPACs, but we have an infrastructure tailored to small public companies. Truly looking at this as a stepping stone to the US market. So you could, and we have a couple of companies I'll go through, but that start on the venture exchange, do an early stage, let's say, $10 to $15 million raise, go back to the market for subsequent, hopefully non-dilutive rounds of capital, do acquisitions using your stock as currency, also attracting top talent, graduate to TSX, and then dual list onto New York or NASDAQ. And last year, again, we had a record number of companies that also dual listed onto a senior market. So there's a very good synergy between the Canadian and the US markets. So, okay, I've just run through a bunch of data. How do you think about going public? How do you know if going public is right for you and your company? And I'll just run through 4 quick things to kind of think about. So one, starting off, does your company have a reason to be public? I'm the first person to say that not every company should go public. In fact, most companies shouldn't. It's a big deal to be a public company. So what are those reasons why? So when you're discussing with your management team, your investors, how do you think about going public? Would your company benefit from all of the advantages of being public that include obviously access to capital? In theory, it's unlimited capital. Acquisition currencies I've talked about, diversifying your shareholder base, maintaining greater control because there are no venture capitalists on your cap table with preference shares and liquidity preferences. And so everyone's a common shareholder, or typically a common shareholder. So you can control your company greater by actually going public. And then again, you're looking for true stock incentives and a pathway to liquidity for your employees. And then just the credibility and exposure of being on a stock exchange and someone has seriously vetted your company. So the second thing is, are you ready to go public? Again, big deal to be a public company, being very mindful of the practical reality of going public, which is, we're looking at, do you have the right management team and board of directors that have industry and public company experience? You're going to need audited financial statements. Are you ready for that? Your internal controls, the infrastructure to be a public company. And then a big one, obviously, is the CEO's time talking to investors. So who's running the business? Who's making sure that, you're running your actual business and then you're running the public company side of the business. And then the biggest one that is, terrifying to most companies, especially early stage, as it should be, is transparency. So are you ready for all of your information to be public? Oftentimes it actually creates an incredible discipline within the company that actually aids the company's success, because they have to be more disciplined because of the transparency and the compliance. So again, for your company, what makes sense? So do you meet our listing requirements? So I'll touch on this very, very quickly. But what's different about the Canadian versus the US markets is that in on New York Stock Exchange or NASDAQ, they're looking for listing requirements of shareholder equity, market cap, share price, et cetera. In Canada, we're looking for the financial fundamentals of the companies. So working capital, revenue, net tangible assets. Again, we have this guide to listing that you can find specifically for US companies on us.tsx.com. But just know that we do have a history of listing pre-revenue companies. And so in that case, we're looking for significant working capital to meet listing requirements. And then finally, this is really at the end of the most important of the considerations is because you can have every reason to be public and be ready and meet listing requirements, but what's the reality? So can the Canadian investment bankers, get investor support from their retail and institutional clients for your type of company, the size of company, and in current market conditions? And so this, of course, is what changes all the time. So if we look last year, what got listed, what got financed, again, significantly in the technology, life sciences, clean tech space on the earlier stages. This year, obviously, right now we are in tumultuous times in the markets, which is not a big surprise considering that we came off a massively record year. Again, valuations were super high, in some cases crazy. Obviously, we've seen some of those valuations. The challenge when you go public in a year like last year at a high valuation, and then you come into a year that's more sort of stable and has a market correction, is then now you're dealing with the reality of your valuation and stock price. And so again, for the right management team, understanding how to navigate through being a public company, being a small public company. So really kind of, thinking about that. And so if we look at the US listings, so again, we had 25, a record year, close to home in LA and Santa Monica, Sabio, which is an ad tech marketing company. So there's a great example of their CEO. He's very sophisticated. He's built companies before. He's taken venture capital, and this time he just said, I'm looking for any other option. He has an aggressive acquisition strategy, and so they went public at the end of last year on TSX Venture Exchange. Through one of our sort of pool companies called the Capital Pool Company, and so we're hoping that they're going to be successful and grow and do more capital raises. So here's a few other ones again across multiple sectors. So the thing about the Canadian markets, which is really important to know, is if you're looking to raise capital, is that we have because we have this history of listing very early stage mining, oil and gas, exploration companies, high risk potential, high reward, but the opportunity to get in as an investor into those early stage companies or those early industries. So if you think about some of the things on this slide, so we've got, fintech, anything in the plant-based food space is very hot in the public markets, champion gaming. So, esports, is a really hot sector because investors know that these are the emerging industries and how do we invest in them early. So right now, cryptocurrency, NFT platforms, those kinds of companies are getting a lot of interest in the public markets, especially at the earlier stage. And so the most recent listing out of the East Coast in January, EdgeTech. So they're a SaaS company, and they just did their listing again. They were the private equity firm that owned them was like, let's exit this company on the public markets and let it grow, and versus taking on more private equity. So really excited to see companies like that come on the market. So I'm not going to go through all these, but just to give you a flavor of that, there's been all kinds of companies. This is on the senior exchange from the US. So from consumer, to clean tech, et cetera. I'm really from sort of across the regions, and then same thing on the venture exchange. So we're really diverse. Another area that caught a lot of attention last year was psychedelics. There's a number of psychedelic companies that are listed in Canada versus the US, as everyone's looking to the FDA to start approving some of these mental health tools. So again, lots of different kinds of companies. Just to wrap up, here's an example of a technology company that listed a few years ago. The blue dots are acquisitions. You can see they've done 4 acquisitions. They've done 4 financings. You can see the stock price. This is the ideal. Hopefully they'll be looking to graduate soon, and then maybe within a year or so, we'll see them on NASDAQ. That this is the kind of company that understands using the public markets to fuel their growth. Another one out of New York, fintech company. So again, a couple of acquisitions, several financings, growing the business in a very different way than traditional venture capital. But in this case, controlling the company along the way. I think this is the last one. This is a crypto company. So again, acquisition, financing, graduated very quickly, in 2 years, graduated up to the senior market, and is now on its high growth path. So I'm going to stop sharing. And I know I just went through a lot of data there, but I'm happy to answer any questions now.
Wonderful. Thank you so much, Delilah. For those of you on the Zoom, go ahead and put your questions into the Q&A panel. John, would you like to start us off with any questions that you have?
Sure. Thanks for giving me this opportunity. I actually have a bunch of questions.
Okay.
I hope it's not all over the place, because it is. Some of them are kind of a little bit different in topic. But can you talk a little bit more about the Toronto Stock Exchange in terms of the type of investors? In the U.S., NASDAQ, especially the New York Stock Exchange, high percentage of institutional investors, so it's relatively stable. You're not going to get a bunch of pump and dumpers, and you don't want people to manipulate your stock price based on that, type of investment strategy. And so with the Toronto Stock Exchange, I know there's a little lower barrier to entry in terms of like costs and things like that. But can you maybe go into a little bit more about, that advantage or disadvantage as far as that is concerned?
Yeah, great question. So yeah, let's talk about the two markets in terms of who the investor base is. So Toronto Stock Exchange, like New York, like NASDAQ, is going to be significantly institutional investors. These are larger companies, larger investments, larger IPOs. So yes, mostly or significantly institutional investors, including not just from Canada. So 40% of our trading comes from outside of Canada. So a lot of U.S. investors, all the major, U.S. investment trading houses and hedge funds, et cetera, they're all plugged into the TSX marketplace. And then on the venture exchange, that is going to be a lot more retail investors. So again, smaller financings, more family offices, et cetera, but a lot of retail. So, this concept of the pump and dump. So, it does happen on all markets, especially nowadays with, online, chat rooms and social media. And we saw a lot of that, when Elon Musk does a tweet, what happens to the stock. And so that does happen. And then you had, Robinhood and all those things. And when people got behind some of those stocks. So that is the reality of the world today. On the venture exchange, it can be more volatile because there's not as much liquidity, because you're not. When you go public on TSX Venture Exchange, you might only be floating 20-25% of your company with the public. So you're still mostly private. So there's not huge liquidity. And so the stock can move. And this is where, again, you've got to have a really great investor relations program. You want to be consistently talking to the street and to investors. And when crazy news comes out in some chat room or whatever, that you have a strategy of how to deal with that. I will say though, especially people sometimes compare the TSX Venture Exchange to the OTC markets in the US. And there's a big difference in that we are a fully regulated exchange on TSX Venture. And so we are monitoring trading, share price, any of that kind of stuff. We approve all of that and we monitor that. And so to the extent that we can, that's what we're monitoring. And I will say one of the big difference between the Canadian US markets is Canada, because of our British law, we have the loser pay system. So we have a significantly less shareholder activism than you see in the US. And that's a big deal because in the US, you can get, anyone who's a public shareholder can sue the company, right? And so that happens a lot in the junior space. And then what that does is it also impacts your D&O insurance, right? Your directors and officers insurance. So that is significantly less cost in Canada than the US. So again, a couple other things to think about just because of the way that the markets are structured.
Thanks for that reply. That actually was quite detailed. And so when you mentioned the outside investors and interpreting that to mean foreign investors, is that correct?
Yeah, outside of Canada. So American investors, international investors.
Right.
Again, because we grew up as the mining franchise of the world. So 50% of financings in the world on mining, come through Canada. So all investors internationally wanted to buy those. And then when we had the big cannabis boom, right, a couple of years ago, when we were listing all the cannabis companies that weren't being able to list in the US, for example, so investors wanted to be part of those, part of those sector growths. And so they all made sure they were plugged into the TSX trading system.
And so the question I was actually leading up to is, in the U.S., KYC, know your customer, is a big issue. I would assume that in Canada, it's the same thing. You don't necessarily want a bunch of investors that you don't necessarily want on your as a owner of your company. Is that also correct?
Yeah, I mean, the practical reality is once you're a public company, anyone can buy your stock, right? So again, this all comes down to having a really well thought out and well managed investor relations plan in terms of who you're attracting. But then at the end of the day, you're a public company. And so there's always going to be those shareholders that, can cause some trouble. But again, having the infrastructure and just not being naive about that going in, one of the big things what happened with SPACs this past year that people never really talk about is the retail investors that came in and kind of came in after a lot of the growth was realized by the SPAC sponsors. And then when the deal was done and they left, or there was a redemption, of their money, the retail investors were left standing, and they're the ones who often saw this dip. So this is why if you're looking at doing a SPAC, just caution you to realize that at the end of the day, when you're now a public company and you have to deal with these angry retail investors because of what happened during the SPAC process, it's just, again, just don't be naive about it. Really be knowledgeable about that.
And so also a couple of things as far as the fact that this is the Canadian Stock Exchange. The listed companies don't have to be domiciled in Canada. They can be, so you can have kind of like in the US, the ADRs, the American Depository Receipts, where it represents a share, and vice versa. In Canada, you can have that for a US company. Is that correct?
Yeah, so in Canada, we consider U.S. companies to be domestic. So you can be an American company with no ties whatsoever to Canada, and we will list you. For countries from around the world, it depends. We have different, we have set of rules for emerging countries, but for U.S. companies, you can be 100% American and be listed on our market. But what that does impact, though, is that then you will need to be following the SEC's, corporate governance, so Sarbanes-Oxley. So the SEC, if you are a fully U.S. company, even if you're trading in another market like Canada, you're still selling securities in the U.S., and so you would have to comply with Sarbanes-Oxley. You can, if you're looking to sort of delay SEC registration for a year or two, and you're a small company, you can actually become a foreign private issuer in the eyes of the SEC by having a Canadian holding corp, and there are rules that need to be complied with that obviously the security lawyers will give more details on. But anyways, it's possible that you can do that too, to delay SEC registration, but you can be a U.S. company and be on our market and be considered a domestic issuer for us.
How much consideration or how much does the exchange rate become an issue for U.S. companies? I know it's fairly stable, but still.
Yeah, no, yeah, and again, I don't know how magically this happens with trading, but there is no currency issue on the trading side. The technology is so extraordinary nowadays that it's all done in real time. You can trade in US dollars on our market if you so choose. But there's, the currency is all just magically converted somehow.
So not just from an investor standpoint of investing in companies listed on the Toronto Stock Exchange, what you're also saying is from a public venture capital standpoint, that's also a great avenue for companies to raise capital or create some liquidity for their shareholders.
Yes, especially for early investors. So again, the TSX Venture Exchange is not really an exit because again, you're only floating a bit of a company. And also we do have an appropriate escrow regime. So if you're an early stage company coming to TSX Venture Exchange, the insiders and management team will be locked up, as they should be, because you don't want to list a company and then take off, especially if you're a high growth company and you're early stage. And so again, what the message that's key here is that we have a marketplace that is tailored to the size of the company. So earlier stage, higher risk. So we're going to have rules and listing requirements around that to make sure that the investors are protected, as appropriately. As the company gets larger, then they look more like a New York Stock Exchange or NASDAQ company. So then we have corporate governance appropriate for that size of company. But it's just the difference in Canada is that we do have what we call, the two tailored markets, both regulated, both monitored, both with the relevant investor base that's different than what you see in the US. Because in the US, you have the OTC markets over here, which are unregulated, and then you have New York and NASDAQ over here. And even though there are listing requirements, like you could list at an earlier stage in New York and NASDAQ, and that might be appropriate for you. But you're also, as you saw from that slide about the size of the company, you'd be a really tiny fish. Like, so if you were doing $100 million IPO in Canada, like that's a decent IPO. In the US, that's teeny tiny, when you in this time of multi-billion dollar IPOs. So who's going to give you attention, right? And are you going to be orphaned once you start trading?
Mm-hmm. Well, you've answered actually a lot of my questions, and during your presentation, you actually also covered a lot of things that was going through my mind. But I guess one last thing is that there, a lot of companies in Pasadena recently have been acquired, as opposed, for that liquidity event, as opposed to, thinking about, well, maybe we should think about an IPO. And you address some of the issues, the fact that you have to disclose so much information because you're a publicly traded company, financially speaking, give guidance on revenues and profits and all that, which you may not necessarily want your competitors to know, but if you're a publicly traded company, you don't have a choice. So I guess that would be kind of your main competitor right now, because institutionals are so flush with capital that they are looking, for a place to deploy some of that, because cash isn't really generating the kind of return, and so now they're making acquisitions as opposed to these companies turning to a stock exchange. Is that kind of what you're seeing as well?
Oh, 100%. If I were a private company right now, I would be getting the list in my sector of every company that went public last year or raised venture capital. You saw the numbers. I mean, the record number of capital was put into the market, both in the private and the public side. So last year in private venture capital, as I'm sure you all know, was a record year of over $300 billion, raised in venture capital in the US. And so if I were a private company, I would be getting that list of who's raised capital, because to your point, cash cannot sit on someone's balance sheet, especially if you're a public company. You have got to deploy that cash. So they're going to be looking for acquisitions. So this year is going to be a big year of M&A. And so again, if I were a private company, I would get the list, who in my industry raised capital last year, and reach out to them, both public and private companies. And then look, if you want to be acquired, this might be a good year to be looking at that. And then also, if you're looking to go public, again, keep in mind, it's a 6 to 12 month process. So even though market conditions right now are a little uncertain, especially with what's going on globally. But if you're looking to start the process, you wouldn't be listing until the end of this year, this fall, or Q1 of next year. So what I say to all companies is, think about all your potential strategies. The CEO's job is to know all of the different options for raising capital, be educated on them, and then to make an educated decision on what's right for the company. And then start thinking and acting like as if you were going to go public, even if you don't do it. So things like getting your audited financial statements, as later stage VCs need that anyways, but it's easier to create the infrastructure now for internal controls, thinking about your management team, who would be appropriate on your board, who you're hiring, your CFO, et cetera. Thinking about that as if you intended to go public it's easier to do it now. I can tell you that the costs of going public are significantly impacted by the readiness of that company. And so if you are thinking about listing in the next, 6 to 12, 18 months, start understanding what that means and what you need to do to get ready, and start putting in those, those disciplines in place, the infrastructure, especially around audited financial statements, because that's what often takes the longest. If I don't know whatever your financial systems are, but they're not sophisticated enough. And also the other big thing is cap table, right? Share structure is a big deal when you go public. That's what has to all be cleaned up. If you've got multiple voting shares and this and this and this, that all has to be, cleaned up. Too many founder shares out there, like whatever all that is. Just again, you can be speaking to a securities lawyer now about how to get ready.
Of everything that you've said during this presentation, that last part I think was probably the most valuable. Couldn't agree with you more. I'm used to be an ex-banker, lender, and I've given talks about making sure that your financial statements and all that are all clean, because that's what a lender or investor is going to be looking at, and again the SEC and all that, and everything has to be in order, because otherwise, you're not going to be successful with whatever strategy that you're trying to accomplish for the for the
and that's what's going to impact the time and cost to going public. It's going to be how ready you are and how much you have to clean up. Right.
And then also appreciated what you said earlier about going public. There are companies that go public and then they go private, and then after a while they turn around and go public again. So I think being listed on exchange, you certainly get that exposure to potential, because otherwise there's literally tens of thousands, hundreds of thousands of businesses, and as an investor or even a SPAC or something like that, you're not going to know every single company, but being on exchange certainly gives you that visibility. So appreciate your comment about that as well.
Yeah, Christy, visibility and just again consistency, infrastructure of talking to investors, communicating to investors. It really does create a discipline within a company, which again for the right company can make all the difference, right? There's a lot of companies that took a long time to go public, and then so a lot of stuff happened along the way that wouldn't have happened, for example, if they had been public, because they just didn't have the discipline.
Yeah, discipline, very key word as well.
Yeah,
Christy,
I agree.
Questions, I'd like to turn this back to you.
You have some questions. Thanks, John. Thanks for those great questions and that information, Delilah. I want to shift a little bit to some more general questions. What advice would you offer to female founders seeking VC in this environment where only 4% of funds go to women-led companies?
Well, and actually last year was even less. So of that 300 billion that was raised in venture capital in the US, only 2% went to women. So even though the amount that was raised was up, but the percentage is low. So I do a lot of work in the female founder space, locally, globally. I don't even know what to say at this point, to be honest, because it's illogical at this point that the stats are all in for diverse management teams outperform financially on every level. Female founders, our women-led public companies tend to outperform, because again, for a woman to get to be a CEO of a public company, they have to be a rock star. So it's not surprising. But so in terms of advice, the challenge, and this is for any of us in the funding ecosystem, because I obviously would love to see a lot more women go public. And last year was a record year in the US. We had 12 women that went public compared to the hundreds that went public that were led by women, but it's still more. So that's great, led by some great, big IPOs like Whitney from Bumble, who was the youngest woman to take a company public. Figs, which, the healthcare clothing company, 2 women founded, Honest Company, Nextdoor, Vimeo, all great women-led IPOs. But it's still low. And the practical reality is because you have to look at the funding ecosystem. At the beginning of the funding ecosystem, when you need that critical friends and family money, if you're a woman or if you're a woman of color and you don't have access to people with cash to invest that critical $50,000, $100,000, you can barely get started. Then you're starting out bootstrapping and trying to make things happen is very difficult. So you need the friends and family money, and then you need to access to the angel investor money. Now there are more angel investors who are women who are coming into the market, which is great because here's the thing, people invest in who and what they know. It's human psychology. We're not going to change that, at least I don't know if my generation. So we need more women to become investors. So that is happening, but still not as much as we need. And then we need the next round, which is the venture capital. So can those women get that funding? And as you can see, statistically, we're not even anywhere remotely near where we were to even remotely be in balance. So they're not getting the venture capital, then they're not going public, right? So the reason why we don't see many companies going public is because they're not, from all those steps before, we're not even close to being in balance. And so I do a lot of work on educating women to become investors, and because that's what we need. We need more women to be helping out at the earlier stages, so that to be investing, I shouldn't say helping out, investing to make money and be helping out, but making money, creating sustainable companies and sustainable wealth. And then from an energy perspective, women being like, we are creating large sustainable companies. So just that energy, if we're going to take companies public. So there's a lot of shifts that are continuing to happen, but we have a long way to go. And again, illogical to me from an investor perspective, because gender lens investing, again, all the stats are out that if you diversify your portfolio to companies led by women or diverse management teams, you will make more money. So I don't know why this is still even a conversation, but we're still here.
I love the work that you're doing to promote women in finance. Can you talk a little bit about your own personal story and maybe also how that goes into your own coaching practice?
Yeah, so I grew up in a small farm town in Saskatchewan, 500 people. I'm actually 100% Ukrainian, third generation. So, I'm a very, very privileged white woman and free living in Southern California because my ancestors left the Ukraine because of the same things they're dealing with now in 1900 to come to Canada. And so I definitely don't take that privilege lightly, and I am doing what I can. In these times, especially past COVID, like there's so much going on, and there's so many things, so many areas that need our help, so many causes, so many ways to go, but we all got to pick our lane, right? And so my lane is because of my background, and because I was with TSX for 10 years in Toronto, then I moved to LA 10 years ago, obviously for sunshine. But I had my own startup. I raised some money. It didn't work. Super humbling experience, but made me more empathetic and compassionate about, because I was like, how hard can this be to start a company and be successful, right? And raise capital. And so I understand all that. That was, the first thing I'd ever really failed at. So that was also important for me. And so now I am very driven, especially I see incredible female founders. I brought SheEO to the US. That's a financing vehicle where women are funding women. I'm working right now with UBS out of London to teach female founders. I was in a class this morning at 6 a.m. Teaching that. And so I'm very passionate about this because I just believe the world needs to be in more balance, right? For the masculine and the feminine, which is in all of us. But if we're in more balance, then I believe that that's what's going to change the world. And I think that we're just in this time now where women are finally starting to realize our true economic power, which, I think we've known about our consumer power for a while now, but our economic power with the money we already have. So if we can shift some of that money toward investing in female founders who are the most scrappy, the most resilient, especially women of color, because they've had no choice to even survive a year or two. And so these are the companies that I think should be invested in. And this is just my personal passion and how I grew up. And again, in this time where the homeland of my ancestors is going through what it's going, it just drives me further to use the privilege I have, because I was born in Canada as a white girl. And this is my lane. This is my network. This is my knowledge. This is my expertise. And I plan to use that to help however I can.
Well, thank you for using all of that for good, and sorry for the suffering that's happening right now and how that might be affecting you. Thank you for sharing so authentically around your own experience and the challenges you've faced. as we wrap up, is there anything that we haven't covered that you would like to share with the audience?
I think, again, listen, this option of going public isn't right for, again, most companies shouldn't go public, and most US companies shouldn't go public in Canada. It's a very specific kind of company. But what I will say is that every entrepreneur needs to know all their capital funding options. And so we get very myopic, especially in the US, of I'm going to start a company, I'm going to get angel investors, I'm going to get VC money, I'm going to be acquired. Like, statistically, that happens for very, very few companies, no matter how rock star you are. So I would just say, and this is, I'm very much a proponent of accessing aligned capital. So being very clear about you, who you are, what you're trying to build, what your why is, be really anchored in what your why is, because in the tough times, that's when you're going to want to quit. So be anchored in your why for yourself personally, for your business, for your vision. And then when you are looking at every source of capital, whether it's different equity options, whether it's debt options, whether it's crowdfunding, whether it's going public, there's so many different financial options now with especially online. There's peer-to-peer lending, there's crowdfunding, both equity and rewards based. There's so many capital options out there that you may be not even knowing about or ignoring. And I just invite everyone to explore all of those options and then make an educated decision. And then what I always say to every founder is, when you're in front of a capital source, you got to just trust your gut. And if your gut says, I don't think this is the right person or investor organization, I always trust that, because I promise you, taking money from the wrong capital source never works out. It never works out. So this is where you've got to be super clear as an entrepreneur. And in this time, gratefully, of conversations about mental health, especially in entrepreneurship. But a lot of that comes back to knowing your why, and then being super solid and having the courage to take the right capital and say no to the wrong capital.
Wonderful advice. Wonderful advice. Thank you so much. We are going to stop the LinkedIn Live in just a minute, but thank you to Delilah for speaking to us this morning. We're so excited to have her. She just put a link as well into the chat in the Zoom. And her information is in the LinkedIn Live information as well. So feel free and reach out to her there. Please join us for the next Friday Coffee Meetup. It's going to be Brave Theory talking about the blue economy. So that'll be on April 1st. So we'll look forward to seeing you all there. For those of you that are on the Zoom meeting, hold on. We will move people over into open networking. Thank you all for joining us on the LinkedIn Live. Thank you, Delilah.
Thank you.